All right, guys, I have two investments this week that are almost certain to be in your portfolios if you have a big box advisor. And these investments are absolutely hurting your portfolio and hurting your future. So I want to talk about what they are and what you can do about them. Stick around. Hey guys, this is RC Peck, and I want to talk to you about two investments specifically. Two investments that are most likely in your portfolio. Now, these investments are different ways of looking at the international stock market. So I want to look at all world ex-US. I want to look at emerging markets. And the reason this is really important is for three reasons. Okay, so three things. One, most people don't know they own this and it's hurting them. Two, you don't have to be allocated to the all world ex-US. So if you live in the US, that'd be called the international market. If you live outside the US, it means you don't have to be allocated to international markets. You could have all your money allocated to the US stock market, which is ginormous, so it's still safe. And number three, even if you don't have any allocation to emerging markets or the international market, what I'm going to talk about with you is really important because it's going to show you how to stay in the area or in the world of owning things that are strong. So let's jump into this. Okay, so what I want to do is I want to jump over to my price charts. So if you look at the screen here, I'm just going to show you, start with the price chart of Europe. And this is a time range of 3.5 years. So clearly your brain, and I'm going to look at Europe, I'm going to look at all international, I'm going to look at emerging markets. So just really quickly, you can see that Europe finally broke above some major resistance here. This is really the trade war high, but major resistance, and it broke higher. Now, what I want to show you is all world. This is really international right here. So this is the whole world. This is the Vanguard FTSE All World ex-US ETF. And so you can see that from the COVID bottom to where it is today, it's up about 81%. So, not bad. I'll take 81% over 78%. So it is going higher. Now, this is one of the tricks or one of the fallacies is, hey, what I own is going higher, so I guess it's okay. Now, the same thing can be said with emerging markets. So let me just put in an emerging market symbol. This is the Ishares Msci Emerging Market ETF. Now, same idea. Now, this one does not look as good as international or all world ex-US. We'll talk about this in a little bit more detail in a moment. But same thing with emerging market here. It went up a total of 92%, but from where it is today, it's only up 72%. So emerging market up 72% from the bottom. All world ex-US up 81%. And the US stock market, let's just see, I'm going to type in SPY. US stock market here is up about 103%. So 25% better than, what's that, all world ex-US, and then about 40% better than emerging market. You don't want to be allocated into parts of the market that are weak, just to be allocated into parts of the market that are weak. And this is a great example here. So let me do this. Let me just take VEU, and I'm going to do what's called a relative price chart. So a relative price chart is literally where you price it in a different currency. So if you're in the US, most of the time you're looking at a price chart, it's priced in US dollars. But right now I'm literally pricing the Vanguard FTSE All World ex-US. So just think of it as the whole world, planet Earth stock market, but without the US stock market. But I'm not pricing it in US dollars. I'm pricing it in S&P 500 units of wealth. And let's just call it an S&P dollar. I know that's not a thing, but let's make it a thing. And as you can see from this price chart, all world ex-US, what I'll just call international, has made a new lifetime low and has been making new lifetime lows. So you don't want to own weakness. And that's one of the things that this is right here. This is showing you, this price chart is showing you that there is weakness in the international market. The three things I teach my clients is understand how to read a price chart in a powerful, simple way, know how to find strength, and know what the signal is. When you know those three things, you can literally take back control of your investing in your portfolio and your life. So this is VEU priced in S&P units, and it's making a new lifetime low. Now this is emerging markets. Let's look at this right here. It looks even worse. So this is emerging markets priced in S&P dollars. I kind of like that term S&P dollars. We should follow that and use it. Though no one else uses it, so they would have no idea what you're talking about. But that's really what is going on. That when you price emerging markets in S&P dollars, it looks really bad, and you want to avoid weakness. Now here is emerging market right there, and you can see that it peaked right there. Now emerging market, a big part of why this is not falling. And let me just type in something here. This is emerging markets without China in it. And you can see that it's looking slightly better. So let me do this. Let me take emerging markets and do emerging markets x China. So now what you're looking at on the screen here is you're literally looking at emerging markets priced in emerging market x China currency units. So you can see it's really not doing well. Emerging markets is really hurting. And the big story is because, or the big reason why is because China is just taking the China NASDAQ stocks and the internet stocks and the growth stocks. China's taking those stocks to the woodshed and just absolutely crushing them. And I've talked about this on other videos where it's made the online education sector in China a nonprofit education, a nonprofit part of the market. So you have emerging markets breaking down and looking weaker. Really, emerging markets is really at this go, no go. It's looking even weaker 7-8 months into 2021. So we absolutely want to stay away from that. But here's VEU. This is all world ex-US, and it's not looking as bad. It's below its lifetime highs, which is only 2 months ago. So it's slowly moving up. It's definitely getting slowed down by emerging markets. And this is Europe. And Europe looks slightly better than all world ex-US. It's still below that June high, but it's moving higher. And so what we have here is, for a lot of people, an unnecessary place of losing money or being hurt because they are what I call over diversified. And here's an example where most people with a big box advisor are geographically over diversified. And in my 20 years of looking at big box advisor people's portfolios, usually they're allocated international anywhere between 20 to 40%. So maybe take it as typically you see 30% of their equity position in international markets. So it can really unnecessarily slow down the growth of their money. So let's talk about the takeaway here. Even if you don't have your money in international or emerging markets, you want to really understand where the strength is in the markets. And here's the thing, emerging markets can underperform for the rest of 2021 or 2022 or 2023. Like they don't have to say like, oh, okay, like we've been underperforming for 6 months, so now let's start outperforming. Emerging markets have been underperforming for around a decade, which is pretty amazing. Same thing with the international stock market as a group relative to the US stock market. So guys, I hope this helps you. If you like this video, I think you're going to love our free course. It's called Clarity and Control. And that's exactly what people are looking for. They want more clarity over their portfolio, and they want the control back over their finances and their wealth and their net worth and their net wealth to really make sure that they're going to have enough. Do you have enough money? Will you have enough money? And that is a free course that starts helping you answer that question. Thanks guys for being in my world. I do appreciate you. Please hit the like button, leave a comment. It helps the algorithms. It says that this video has value and it helps so other people get access to watching this video. Okay, until next time, I will talk to you. Have a good rest of your weekend and week. Okay, bye.